For anyone out there seeking a mortgage loan, understanding the debt-to-income ratio, or DTI, is paramount. DTI is a critical factor that mortgage underwriters use to assess an applicant's financial capability to be able to handle mortgage payments along with their current debt. As a mortgage loan professional, I'm here to shed some light on the intricacies of DTI, how it's calculated, and what you could do to make sure that you meet the DTI requirements of a specific loan program. The debt-to-income ratio is a simple yet very powerful metric that compares an individual's monthly debt obligations to their gross monthly income. It reflects the percentage of income allocated towards debt payments, indicating the borrower's ability to manage additional financial responsibilities, such as a mortgage. Mortgage underwriters use the DTI ratio as a risk assessment tool. A lower DTI ratio signifies a more favorable financial position and a higher probability of making mortgage payments consistently. Generally, lenders prefer applicants to have a DTI ratio of about 43% or less, but different loan programs may have varying DTI requirements. This is how underwriters calculate DTI. They basically add up all your monthly debt responsibilities, including credit card payments, auto loans, personal loans, and any other outstanding debts, not including utility bills and cell phone bills, stuff like that. Then they'll divide your total monthly debt by your gross monthly income before taxes and any other deductions. And that equation will give you some sort of decimal point. To get that to a percentage, you simply multiply by 100, and that'll give you the percentage. For example, let's say your total monthly debt payments equal about $2,400 and your gross monthly income is, say, $9,000. Your DTI ratio will be your monthly debt divided by your gross monthly income, in this case $2,400 divided by 9,000, multiply that by 100 to get your percentage, and you're left with about 26.67%. That's your DTI ratio in this example. Here are some tips to make sure that you meet DTI requirements. First tip is to reduce debt. It may be a good idea to pay off some of that high interest debt and maybe consider consolidating loans to lower your monthly debt obligations. Aim to reduce your outstanding debt as much as you can before applying for a mortgage. Now, I'm not going to lie, the second tip here is easier said than done, but consider ways to increase your income. If you could maybe get a part-time job, a little side hustle, do some freelancing, or even ask your boss for a raise at your current job. Now, I know, like I said, that's easier said than done, but if you're able to pull this off, a higher income will certainly improve your DTI ratio. Step number 3 is to just do some old-fashioned budgeting. Track your monthly expenses so you can find out where exactly you might be able to cut back, and then you could redirect those savings into perhaps paying off some of that high interest debt, or just to increase your savings so that you have a higher down payment when applying for a mortgage. Now that brings me to step number 4, which is simply saving more for your down payment. The larger the down payment you have, obviously the less money you need to borrow, subsequently lowering your monthly mortgage payment as well. Now this will definitely improve your DTI ratio, making you more of an attractive borrower, thus making you more likely to get approved for that mortgage loan. Lastly, we come to tip number 5, and that's to choose the right mortgage loan program for you. Some mortgage programs are a lot more flexible with their DTI requirements, and as your mortgage loan professional, that's where I would come in and I would be able to explore different loan programs that actually fit your financial situation. By understanding how DTI is calculated and the factors that influence it, you can take proactive steps to meet the requirements of your desired mortgage loan program. If you'd like to learn more or maybe find out if you're able to meet the DTI requirements for a mortgage loan, comment the letters DTI down below and I'll reach out to you. I'd love to help. With careful planning and dedication, you could position yourself for a successful mortgage application and pave the way to homeownership in no time.